Not only did we rally all the way from 380 to 395 as expected in our last video, I personally believe we're getting very, very near to a large upward move that we could see us hit all the way up to 394.50. We also closed right on my orange line. I have not changed this orange line at all since the first time I showed you guys. I think it was like back in May. This is that very special line that goes all the way back to 2009 lows, which I've shown you many times, but I'll do it one more time here if you are new to the channel, which if you are new to the channel, make sure to subscribe below. This one goes all the way down to 2009. It is a very, very key line, as you can see in many of my videos. I do the 2009 low here during that big recession, drag it across all the way to the top. It predicted the 2018 correction and 2020 COVID crash. Both of these instances, they fell off of this thick resistance here, and now we actually closed right on it today. No surprise at all that the MMs closed it on here, and basically for this week, there's a lot more that will happen, even though we only have 2 more days left in the week. We have a lot of earnings, especially next week, but today I'm just going to go through some of my thoughts going forward. So there were many variables, as I told you guys in the previous videos, that made me have my thesis of us actually reaching this level when a lot of people did not think that would happen. One of which was the dark pool accumulation we were seeing around these levels. If we go to the OrderFlow application really quick here, go back to Friday actually specifically, this was July 15th, we saw a lot of dark pool activity hit the tape. We had a $2.4 billion worth of shares hit the tape for the dark pool on a singular order, as well as 1.9 billion for a signature print. And this was consistent throughout the entire week. Like if we go back to the 14th here, we could see that there was 2.9 billion worth of signature prints on that day, and it's consistent throughout that entire week, which I shared with you guys. We typically see an uptick in dark pool activity prior to a large move, and I expected the move to be up because this seemed like a lot of accumulation to me. So we did end up having that move up, and there still is some more potential for continuation. However, as I tweeted earlier and shared with you guys in the chat, I did get out of all of my long position, one of which being the fact that we were up so much on that position, because I did originally load those longs at 3,760 on SPX, which was all the way back here at 375 on SPY. So that is a very, very large increase. It's over 200 points since there, and I did want to take profits, but also I took it during the up here during this kind of like rally over this line. But also I realized something very important, and that was we had a very large gap here. This is the second gap of these 2 big gap downs. You can see the first gap right here on the 15-minute chart. This one got filled over here during this big rally, and then this one has not been filled to the upside yet, and I do expect it to be filled with my further price target, which may hit by the end of August or mid-August, and I have shared that before. But in terms of this video, this one I do expect that we will fill it to the upside eventually. However, we typically see fake outs where we bait a lot of bulls and then fall back and then fill it much afterward. And that's something that we saw all the way back here when we tried to fill it for the first time, this original gap. We had the big gap down here, consolidated below here. We had a big rush upwards. We got into the gap, and then boom, straight down, big gap down, faked out a lot of bulls that thought the gap would fill immediately after. And then eventually a few days later, we did end up filling it. And I expect something similar here where we had a big fake out where we kind of got into the gap. As you can see, this portion of the gap here, we got into it earlier today on this big resistance and then fell down. We closed pretty high still, but this was a big fake out for people that may have thought this gap would have filled during today. Market makers just kind of like to mess with you in this case. They do like to collect your premium. That's their job. So this is kind of what happened, but eventually I do believe this will get filled. The question is just when, and I personally don't have a time frame on that, nor do I care. This was a very, very successful trade for me. I am not in any way trying to risk anything. I'll sit on my hands if I need to for the next few weeks without taking much other than scalps during the day if I need to do that. But otherwise, this was a major, major play off of here to this resistance. Worked perfectly. And just going forward, the market does look strong now. If we go to the daily chart here, it does look strong, but what's key for bulls is getting above this orange line, which I shared with you earlier. Right now, we have not had a daily close above this line since all the way back around this time here. Well, I guess technically up here was a daily close above, but when we were kind of trading along this line, 25th of May was the last time we were above it and close. So this is key for us to get over. If we do get over this, there definitely is a lot more upside, and this can be your risk if you are trading it. So a lot of people have asked me lately, how do I incorporate good risk reward strategies with price action? For example, they say, Ben, if you have a good bias towards the upside, how would you know to just get contracts for calls going to the upside without just having no risk reward at all. And basically, because of my TA that I've been able to kind of have a lot of experience with over the years and have mastered in my own art, I guess you could say, specifically to how I work and how my perception is, I know that this line is very, very crucial, and it has acted as a very crucial line lately. And you can see it here today. We closed right on it, directly on it. That's no coincidence at all. And because we closed right on it, I know that this is a key line. And I know because it's a key line, I can have my risk based off of it eventually once we get above. So if tomorrow we had a daily close above here, which I'm not saying is going to happen, this is just hypothetical, but let's say it happens. We have a daily close above here at any level, any given level. We can use this as our risk going forward for a swing. So you can enter in calls, let's say, because we had a daily close above, and as long as a daily close doesn't close below, especially 2 daily closes, below this line, then you can continue to hold that swing position, whether you go out 3 months in terms of contracts or you take shares of XPXL for a triple leverage ETF. It all would remain the same. Your risk would be this line, and you don't want to have 1 daily close below it, specifically 2, because you can have a fake out to the downside, but just a little bit less likely that would happen. But otherwise, this can act as your risk, and that's my thinking with all of my lines that I have on here. It's not just this line, it's all of my lines are key trend lines, and most of my lines are on SPX. This one's kind of a mess, as you can see here. That's why I'm not on it right now. But for the most part, because I know that these lines are key, I can base my risk off of them. And if you could base your risk off of them, that's all you need for a trader. Risk is everything. Once you're in this game for a long time, you realize the reward is not what you're interested in. It's more so, well, it is, you want money, but it's more so about how little can you risk. And that's why you see a lot of high frequency traders show up, especially during the 2000s, mid 2000s, like 2010, around that time. We saw a lot of high frequency traders show up because their risk is only a few seconds long for a potential reward of them going minutes or at least like even an hour off of that. Because they're able to fine tune their risk super short, that means they're barely risking any money with a lot of upside reward. And time is obviously a factor of risk. So that's just my little rant there for you guys. One last thing I want to talk about here is DXY. So DXY has fallen kind of as predicted in that last video. We had 3 big red days so far. It maybe has a little bit of a relief bounce right now, but as of now, it does look bearish unless we get back up above 108.2. Looks pretty bearish going forward, at least to continue downward, which can help with a bid on SPY. And then actually last thing here I do want to talk about is the SPY put flow we did see come in after hours today. This is an ideal setup, honestly. I want there to be a pullback. Because of how strong SPY is right now, I don't expect there to be that much of a pullback. This thing is kind of ripping to the skies so far, so I don't expect us to have a very large pullback off of here. If it did happen, then great, it could load up because I still consider this to continue upward as I shared with you earlier. But as of now, because of this put flow after hours, maybe we see not only maybe a gap down, not a gap down, then maybe we have a little bit of weakness going into the open tomorrow. That'd be ideal because as of now, I would continue to play with my bias towards the upside in terms of my day trades on that price action, and otherwise just continue to trade mostly longs and probably not get into many shorts just yet. There will be a time for that in the fall, which I will share with you guys once we get there. But otherwise, I do appreciate you guys watching this video. Really happy about this past week for sure, and hope you guys were able to profit on your own terms. Otherwise, I'll see you guys in the weekly recap on Sunday.